Now, the statement, the monetary policy resolution, and all other announcements are already with you, and I'm sure you would have gone through them. Now, what is the broad picture that is emerging from the monetary policy and other decisions that we have announced today? I would like to summarize them in terms of 6 points. I would like to mention what is the broad picture that is emerging. First, in an ocean of high turbulence and uncertainty, Indian economy is an island of macroeconomic and financial stability. The economic growth is resilient. Now, all these are possible, that is financial stability, macroeconomic stability, resilience of growth, despite two black swan events happening one after the other and despite multiple shocks. That's the first takeaway from whatever we have said. Second, at this point of time, there are signs that inflation consumer price inflation, CPI inflation has peaked, and it is expected to moderate going into the fourth quarter of this year and the first quarter of next year, and that is the numbers which we have presented in our in this policy, in the MPC statement and in the resolution. But inflation still remains at uncomfortably or unacceptably high levels, and therefore monetary policy has to act, and there are also several uncertainties which are clouding the outlook. So monetary policy has to therefore act, and that is why the monetary policy action of 50 basis points rate hike that was announced today, unanimous resolution of the MPC. The third point is that if you put together the first 2 points, what I said, now what emerges out of that is that steps have to be taken to contain inflation and inflation expectations. And the other thing that comes out is that the resilient economic activity gives us the space to act. And the aspect of growth is always taken into consideration and is always factored in MPC's deliberations as well as in MPC's decisions. The fourth point I would like to mention as a part of the broad picture is that the excess liquidity which we had, that is being gradually brought down. I have mentioned about it in the resolution. And we have also said that there will be two-way fine-tuning operations with regard to liquidity based on the evolving situation to ensure that there is adequate liquidity in the system. The fifth point is that with regard to the external sector, the current account deficit is expected to remain within manageable limits. And the Reserve Bank has the ability to finance the current account deficit based on our assessment. The forex reserves remain strong, and Reserve Bank will effectively deal with excess volatility of the exchange rate. And as I mentioned in the statement, the umbrella remains strong. The sixth and final point is that monetary policy will be calibrated, measured, and nimble, depending on the unfolding dynamics of inflation and economic activity. The focus will remain on ensuring safe and soft landing for the economy. And as I added as a part of my statement, it is once again a whatever it takes approach for the RBI going into a third year. We had it in the first year of the pandemic, second year of pandemic 21-22, and also now given the challenges that we are confronted with, given the uncertainties that we are confronted with. So that's all I wanted to say. I would now leave it to Yogesh to take us forward.
Thank you, sir, for the opening remarks. Now we'll begin the press conference. I'll invite first Mr. Mayur Shetty from Times of India to ask his question.
Thank you, Yogesh. Governor, the rate hikes have been very sharp and they've come in quick succession. Are you not worried that this will kill demand, given that they are getting passed on also immediately due to the repo rate linkage to areas like home loans? And the second part was your rate hike comes even after you made an observation that inflation appears to have peaked, and we've seen commodity prices coming off. So to what extent is your action linked to the external front?
You see, inflation still remains at 7%, unacceptably high levels. And even according to our projections, they remain above 6% for the next, for the first 3 quarters of the current year. The fourth quarter projection, we have said 5.8. So with that kind of inflation trajectory, obviously monetary policy has to act. With regard to the repo rate actions that we have taken, if you see it in a comparative perspective, although our decisions are primarily driven by our domestic factors and domestic situation, but if you look all around, other central banks today, 50 basis points, if I can say, has become the new normal. And quite a number of central banks are now hiking by 75 to 100. So there is a tendency that 75 to 100 basis point rate cut will perhaps, take over 50. But then in the Reserve Bank, as I said, we take a very calibrated and measured view. We factor in the impact of the rate action on the aspect of growth. I just mentioned it a little while ago. So the aspect of growth and the aspect of a rate hike on our demand, overall consumer demand, urban or rural demand, all that is always factored in. And based on that, we have taken a balanced call based on the prevailing and the expected inflation growth dynamics.
Thank you, sir. I'll move on to Shitama Bose from Financial Express.
Thank you, sir. My first question is on the liquidity situation, with that turning very volatile. Since the impact of the past hikes have not been fully passed on to deposits so far, how do you see that situation evolving going forward as we enter into a spate of more volatile liquidity conditions generally? And for your inflation forecast that you've offered today, sir, has the impact of the past 2 rate hikes been factored into that?
They have been factored in, but I think I would ask Deputy Governor Michael Patra to take both parts of this question.
Yeah, once a rate action is taken, it's a fact, and we use all facts to make our projections. If we do not take into account prospective actions, so in that sense, it's a baseline scenario. But the baseline scenario includes the fact of us having acted before. As far as the liquidity situation is concerned, you might have seen that there is very aggressive deposit mobilization, starting with the bulk deposits, and we expect deposit mobilization to catch up with credit very quickly.
Thank you, sirs. I'll move on to Mr. Govardhan Rangan from Economic Times.
For long, the policy was aiming to get the economic recovery what is into a durable mode. Now, if you look at the credit deposit ratios, it's at 110%. Look at the incremental credit deposit, and credit is growing at 14%. And the external demand is also very strong, and CAD is projected to be somewhere around $100 billion. All these are going to have an implication on the liquidity in the system. All right. So, what is going to be the RBI's response in terms of liquidity when there is going to be a strong economic recovery taking place with a kind of a huge current account deficit as well? Thank you.
You see, what is the most likely scenario is that the banks will, the most likely scenario, of course, it's a decision left to the individual banks, but the most likely scenario is that the impact of the rate hike will be passed on by the banks to the deposit rates. Already the trend has started. Quite a number of banks have increased their deposit rates in the recent weeks, and that trend will continue. Because when there is a credit offtake, obviously the banks can sustain and support that credit offtake only if they have higher deposits. They cannot be relying on central bank money on a perennial basis to support credit offtake. They have to mobilize their own resources and own funds. So that is something which is the most likely scenario. With regard to liquidity, as I have said it, as you know, as has been said in my statement, that we will do two-way operations for dealing with the liquidity situation that is prevailing. Last month, there was a sudden, squeeze on liquidity because of, very high GST and other tax collections. So that was just for about 3-4 days. So therefore, we conducted that, the fine-tuning operation of injecting repo. We did a repo operation of 3 days maturity. So our effort will be to ensure that there is adequate liquidity, and the rest for supporting the borrowing, for supporting the credit offtake. I think the banks will, the most likely scenario, I just repeat myself, is that the banks will raise their own, perhaps the deposit rates, and they will take efforts to mobilize more deposits. Deputy Governor Patra just mentioned about banks, launching deposit mobilization drive. So that process, I would expect, will continue.
In terms of the MPC's decision itself, how much did the currency weigh? The movement of currency, because there is a line mentioning about the US dollar appreciation could have an impact on the inflation as well. So how much did it weigh on the MPC's unanimous decision?
The MPC, the monetary policy is an inflation targeting framework while keeping in mind the objective of growth. So therefore, it is the inflation growth dynamics which is the primary factor that determines monetary policy actions. Exchange rate indirectly may come in because it leads to, a rupee depreciation leads to imported inflation. So its impact on inflation is definitely a factor, but the rate per se is not a factor for the MPC to really deliberate upon or base its decision on the exchange rate.
Thank you, sir. I'll move on to Ms. Lata Venkatesh from CNBC TV 18.
Thank you, Yogesh. Thank you, Governor. So you reiterated that the macros are resilient, and in your speech as well, you point out that growth is fairly good. You point out that capacity utilization is higher than the long-term average. And of course, import demand has been aggressive. So still, our real rates are deeply negative if you go by current inflation rate. So will you want to front load and come to positive real rates quickly? And how does RBI look at the neutral rate? Do you look at it as 1% plus, 0.75 plus inflation? Also, if you can give what is your CAD forecast, current account deficit forecast, separately?
So 3 parts to your question, and please remind me if I forget one. With regard to the CAD forecast, we have done our various scenario analysis, assuming various levels of crude and commodity prices. And based on that analysis, we do feel that the CAD will remain at sustainable levels.
No number.
But the number I would not like to mention. And this is a continuing exercise. I mentioned one number, the number may undergo a change depending on the evolving situation. But at this point, based on our forecast also, we feel that the CAD will be at manageable levels. Now, with regard to negative interest rates, yes, negative interest rates are a matter of concern, and that is something which obviously engages the attention of the MPC during its discussions and also internally in the Reserve Bank. And with regard to what was the other thing?
The specific question is, will you want to front load and come to positive rates quickly?
Okay, now that is something which I'm afraid I cannot spell out, because it will depend on the evolving dynamics. And there are 2 aspects to it. One is our primary target of, bringing down inflation closer to the target and factoring in the aspect of growth and so many international uncertainties and developments. So the exact approach, whether we will front load or we will space out, it is for you to really assess. So far as the MPC is concerned, as I just said at the beginning, the MPC will take measured and calibrated action depending on the evolving situation. Beyond that, it will not be possible for me to provide an actual, a kind of a roadmap that this is how we are going to do. Perhaps you are referring to the kind of dot plot that US adopts, but in an uncertain environment that we are living in today, extreme uncertainty, I think the dot plot itself will have to be revised every fortnight.
No, my minimal point is that even your year ahead inflation forecast is 5%. You'll have given that new number for the first quarter. And, that is still 1 percentage point above the 4%, which is the MPC's target. Therefore, will you front load?
I think, would you like to approach? Is there something we would like to add?
When we were in the pandemic mode, there was only one thing that was moving. That was inflation was high and the policy rate was low. Now we have two moving parts. One is the policy rate is rising and inflation is likely to fall. So anything can happen. Now there are two moving parts. It might be sooner or it might be later.
Thank you, sirs. I'll move on to Mr. Anup Roy from Bloomberg.
Thank you, sir. Sir, I'll take Lata ma'am's question a little bit more. Sir, CAD, you are saying it will be sustainable, and earlier you have said the CAD is modest. After the trade data, recent trade data, some analysts are saying CAD can be 4% of GDP. So what gives you confidence that CAD will be sustainable and modest? And what is, in your previous study also, sustainable CAD was around 2.5% or something like that.
I thought I answered that question, but I think let Deputy Governor say if he wishes to add anything.
The CAD for the year as a whole cannot be assessed on the basis of 1 month's trade deficit. No, you've just got May and June, which were high. Okay, now let me tell you some facts about the trade deficit. First of all, the small decline in exports is because petroleum product exports have slowed down. Now, the government has immediately responded by reducing the export tax and also the windfall tax. And we expect that it will be back on stream in a month's time, because this reduction of duty has been sizable. Number one. Number two is in the imports. The average price of oil, which we announced in the MPC, was 105 per barrel, which is in governor's footnote. But today it's trading at 94. All commodity prices are easing. So we expect a lot of relief on the import front. Now, what is the thing about the current account deficit? It's not the size that matters. Is it financiable or is it not? Now, FDI is higher than last year. Portfolio flows have started coming back in a big way. On August 1st, we got portfolio inflows of the amount equal to whole of July. Trade credits are strong. ECB, we have enhanced the opportunities for accessing it. And NRI deposits are also being liberalized. So I think it's eminently financiable.
Thank you, sirs. I'll move on to Mr. Laltendu Mishra from The Hindu.
Thank you, sir. Governor, we are now confronted with the third Black Swan event that is happening, playing out in Asia. Are we worried for that? And if in case that happens, do you have anything to handle this situation? Thank you, sir.
You are referring to, what's happening in Taiwan, probably. Now, I think it will be extremely premature to call it a Black Swan event, because we are just about 2 or 3 days into it. But so far as India is concerned, our trade with Taiwan is minuscule. It's about 0.7%, if I remember correctly, 0.7% of our total trade. So therefore, the impact on India is expected to be, will be very, very, very negligible, because we just don't have, and if, the capital flows in terms of FDI and other things are also very, very, very low. So therefore, India is not really going to be impacted with regard to what's happening or what is likely to happen in Taiwan.
Thank you, sir. I'll move on to Mr. Bijoy Idicheria from Informist Media to ask his question.
Thank you, Yogesh, sir. Sir, is it possible for RBI and MPC to look at decoupling? Because we've heard that word being used in past statements from the RBI. But is it possible to actually decouple from global peers, from global players, even when there are so many factors at work? And also, now that you are well over the pre-pandemic level on the repo rate, Was there discussion on actually moving to a neutral stance, and was that the cause of dissent from Jayan sir for the stance?
No, the cause of dissent, etc., I think you have to wait for the minutes of the individual members. It will not be correct on my part to paraphrase what individual members say in the MPC. Their minutes will come out after 2 weeks and you will see it. Now, with regard to decoupling, the point is, we are living in a globalized world. So India obviously is impacted and will be impacted by what is happening all around. And in fact, I think there is a sentence in my statement that India has been impacted, by all these geopolitical crisis and the pandemic related shock. So therefore, India will be impacted. Decoupling, I think we might have if I remember correctly, would have said it in a particular context, not necessarily that we are completely isolated, we are, kind of completely insulated or isolated from what is happening all around. India will be impacted by what is happening all over. And we have seen it in the recent years, and we are seeing it even now. So therefore, one thing that is happening today worldwide is that the world is getting, more fragmented. There is a sentence in my statement. The world is getting more fragmented in terms of trade, in terms of capital flows, in terms of geopolitics. And perhaps the world is no more flat. So in that situation, India will be impacted by what's happening all around.
Asked whether neutral stance was discussed because you'll have now moved past the pre-pandemic point.
I think what was discussed you will see in the minutes.
Thank you, sir. I'll move on to Mr. Subrat Panda from Business Standard.
Thank you, sir. Is the RBI worried that there is an element of demand pull factor that is making the inflation persistent? And also, now that you have said that inflation has peaked, so at what level will you feel comfortable to pause?
So far, the current inflation is concerned, I think the demand pull is not a significant factor. It's primarily due to various supply chain issues and because of various international developments and because of imported inflation. India did not inject the kind of liquidity and other kind of stimulus support which many other countries, especially advanced countries, provided to their economies, which has resulted in a lot of demand pressure, and there is naturally that has fueled inflation. So far as India is concerned, the monetary policy actions did not fuel inflation. I mean, that is the position what comes out of our analysis today, as of now. So therefore, it's essentially because of supply chain and international factors that it is happening. And what else you asked? That only, it's a very, very uncertain situation, and it's not as if I'm trying to, answer to your question. It's not as if I'm trying to be diplomatic or anything. It's very difficult to say at what level we will pause, because the situation is dynamic, the situation is extremely uncertain.
Thank you, sir. I'll move on to Ms. Gopika Gopakumar from the Mint newspaper.
Good afternoon, Governor. Thank you, Yogesh, sir. My question is with regards to the relaxation that RBI came out with, the measures that RBI came out with regards to increasing forex inflows. It's been a month. You came out with these measures to increase NRE deposit, relaxations on NRE deposits. What has been the impact of these measures? Has there been, because bankers keep saying there's not been much demand for NRE deposits. What has been the demand? And secondly, Niti Aayog came out with regulatory framework for digital banks. Is RBI in favor of setting up digital banks?
Now, with regard to the first question, we announced these capital flow measures on 6th of July, to be precise. It's exactly 1 month. Based on, and it required that the board of directors of banks will have to take a decision and will have to decide what spread they will have. And that is, I think, many banks, their boards of directors, they have decided, and they have come out with their own decisions by, announcing what kind of rates, higher rates they will offer to the, for all these FCNR deposits. Now, it's too early. We will have to wait and evaluate. And it's too early to say what will be the impact, because the banks have just decided. And so we can, I'll be in a better position to answer maybe after about a month, to this particular question. And with regard to the digital banking, etc. So, the entire digital space is under the RBI's, we are studying the whole digital world, not just for cyber security and data security, etc., but in terms of its role in the financial services sector. The digital banking unit framework we announced last month or month. And with regard to the digital banks, etc., we are, that is one of the issues which is, we are examining how to sort of make the best use of the possibilities of digital lending. Currently, the activities are mostly being done, even today, digital lending is happening. Today, digital lending is being done by the banks. There are many, licensed NBFCs which are, licensed with the RBI. They are also undertaking digital lending activities. So this is an activity which is going on. The field is fast evolving. So whatever is necessary for dealing with this, in this entire ecosystem, the RBI will respond to the emerging needs. And to definitely, I will not be at the current moment, I will not be able to give a definite reply that we will do this or we will do that. I think you'll have to wait for that.
Thank you, sir. I'll move on to Ms. Swati Bhatt Shete from the Reuters.
Thank you so much, Governor. So, sir, in the recent past also in your speeches, you made the RBI stand on the currency very clear. You've said that RBI is there to defend, the currency and will not let extreme volatility be there in the market. So I just wanted to understand what is the definition of volatility that you have in mind, because we have seen on certain days that the rupee has been wedged in a 5 to 8 paise band, but RBI has been there aggressively in the market. So, it wouldn't be fair to call it volatility on that particular day, and that has happened several times in the recent past. So what is RBI's definition of volatility? Is there an internal level on the currency that the RBI has in mind? Because we saw a lot of intervention when it touched 80, and, we've seen it's consistently try to bring it below that. So just your thoughts on that. Thank you.
Is it to use a cricketing parlance? Volatility would basically mean the level, the degree, and the level and degree of the swing that the ball takes. But let Dr. Michael Patra, Deputy Governor, reply to that question.
I think Governor has stated this many times. We don't have a level in mind. And volatility is usually defined in terms of some measure of variance. And variance, by definition, is the departure from the mean. So we watch the departure from the mean and calibrate our actions accordingly.
Thank you, sirs. I'll move on to Roisuke Hanada from the Nikkei.
Hi, thank you, Yogesh, and thank you, Governor. I would like to ask about the economic crisis in neighborhood country. At this moment, is there any discussion between RBI and Sri Lankan government regarding some of the further assistance, such as the currency swap agreement or any other measure?
You see, firstly, as a central bank, we do not comment on the economic developments in our neighboring countries or, for that matter, in other countries. We do examine them from the point of view of what impact they can have on our economy. And with regard to the discussions with the Sri Lanka government, it is always government-to-government discussions. The central bank, that is RBI, does not enter into any direct discussion with the central bank, with the Sri Lanka authorities. Government-to-government discussions are always at government level.
So I'll move on to Mr. Ashish Agashe from the PTI.
So this was with regard to the BBPS announcement today. How will it work for one? And secondly, sir, what is the motive behind it? Is it to reduce the margins which the RBI has expressed its margins which the banks make, which the RBI has expressed its concerns over in the past, or is it more of a remittance sort of a inflows sort of a measure?
I would request Deputy Governor Ravi Shankar to take that question.
No, the margins were definitely not, what came into mind when this was introduced. This was essentially a measure of convenience for NRIs and for their relatives staying here. There are a few advantages. One is that an NRI might not have access to the full suite of bill collectors that is available, more than 20,000 on the system. So they will, all of these will become available to them. Not all NRIs might have an NRE account in India, so that will also not be necessary. So the whole idea is that they will be able to pay any bill, insurance, electricity, utility, any other utility, any bill through a system, through an interface that will be provided by exchange houses or even banks. The idea, the focus is on convenience. It is not on in any talk of spread or any such thing.
Thank you, sirs. I'll move on now to Mr. Ankur Mishra from ET Now.
Thank you, Yogesh ji. Good afternoon, Governor. So just wanted your attention once again on the stance part with the repo rate surpassing the pre-pandemic level. I just wanted to know, will it be a fair expectation that this year the stance will shift from withdrawal of accommodation to neutral?
I think with regard to future policy, frankly, as I said, it will not be possible to provide a future guidance. Usually when we are on a rate cutting cycle, it's the usual done thing and it's easier to provide forward guidance. But when we are on a rate, where we are now on a cycle of rate hikes, and given the level of uncertainty, I would not venture to provide future guidance about the rate actions. The future guidance is essentially withdrawal of accommodation. That we are withdrawing accommodation and we want to control inflation. I think from that you have to draw up your own derivatives.
So second, there is only one bank which has been remaining in PCA for quite some time now, and that bank is claiming almost for 7 to 8 quarters that they are out of those PCA parameters. Not related to one particular entity, but as a process, what are your considerations for bringing that entity out of a PCA? I mean, what goes behind apart from those numbers?
I think Deputy Governor Jain can probably take that question.
That request has been received at our end. We are examining it. It's not only the quantitative parameters, it's also the qualitative parameters which we examine before taking any decision. Because when any bank has been taken out of the PCA, it should be on a sustainable basis.
Thank you, sirs. I'll move on to Mr. Anand Adhikari from Business Today.
Good afternoon, Governor. Governor, what percentage of, sir, what percentage of bank deposits are linked to external benchmark? Because I was looking at some RBI data for the weightage average lending and the deposit rates. While the lending rates have gone up by 14 basis points, the deposit rates have gone up by 4 or 5 basis points. I just want to understand what percentage of bank deposits today are linked to external benchmark.
No, bank deposits are not linked to external benchmark. It's the bank lending rates which are linked to the external benchmark.
So some banks like SBI and all, they offer the bulk deposit which are linked to external benchmark. Even the Yes Bank recently they introduced a product which is linked to the external benchmark.
No, that is as you know, the deposit rates and so also the interest rates are completely deregulated. So it is for individual banks to decide their deposit rates. But so far as the central bank, the RBI is concerned, the external benchmark doesn't apply to the deposit rates.
And there is no data as of today to know the percentage share of deposits which are linked to external benchmark? I mean, there's no such data. with
No,
the
you are
RBI?
saying that some banks are linking
Yes,
it.
yeah.
So we don't keep that data because, because our external benchmark is not linked to deposit rates. So therefore, the question of our maintaining that data would not arise.
Thank
If some banks are linking it to, let us say, the external benchmark like the T-bills or the 1 year, the 2 year GSEC or 10 year GSEC, I mean, it's there. It would be their decision.
Okay, thank you.
Thank you, sir. I'll move on to Mr. Anurag Shah from Z Business.
थैंक यू सर, नमस्ते सर. सर, क्रेडिट रेटिंग एजेंसी के रेगुलेशन को लेकर आरबीआई को क्या दिक्कतें हैं, क्योंकि अभी उनका जो रेगुलेटर है वो दूसरा है, लेकिन वो रेगुलेटर के द्वारा रेटिंग लोन की रेटिंग की जाती है सर.
नहीं, आरबीआई को तो कोई दिक्कत नहीं है. हम सिर्फ बैंक का जो बैलेंस शीट है, जो रेटिंग्स वो क्रेडिट रेटिंग एजेंसीज प्रोवाइड करते हैं और जो उनका जो असर बैंकों के ऊपर है, हम उसी एरिया में डील कर रहे हैं. तो आई थिंक डिप्टी गवर्नर राजेश्वर राव प्रोबब्ली आई वुड रिक्वेस्ट यू टू टेक दैट क्वेश्चन.
We don't have any issues, I think, but the fundamental fact is the rating agencies are regulated by the SEBI. But the bank loan ratings are required to give any concessional risk weights, etc., for the banks. So those guidelines have to be framed by the RBI, and those guidelines have been framed, which the rating agencies are expected to follow.
सर, दूसरा सवाल होगा सर, आपने इससे पहले वाली पॉलिसी में भी कहा था कि जो डिजिटल लैंडिंग से जुड़ी हुई गाइडलाइंस है वो जल्द आ जाएगी, तो उसमें सर क्या जो वक्त लग रहा है, क्या आपने उसका जो पैमाना बढ़ा दिया, डोमेन काफ़ी बड़ा हो गया है उसका, इस वजह से जो देरी काफ़ी लग रही है उसमें? और उसी के साथ साथ हम देख रहे हैं सर, काफ़ी देश भर से ऐसी शिकायत